there! Have you noticed all these outrageously expensive mansions and luxury condos sprouting up everywhere? It's kind of wild when you think about it. While the skyline gleams with all these high-end apartments and upscale townhomes, millions of Americans are still struggling just to find a decent, affordable place to live. It almost feels like we're drowning in luxury homes that nobody's actually living in. Today, we're going to unpack why America is drowning in luxury homes and just exactly how we got here. Spoiler alert, it's way more than just rich people building fancy houses. So, stick around. Also known as the post-war housing boom, after World War II, America experienced a massive housing boom. The GI Bill provided veterans with low-interest home loans, fueling a wave of suburban development. This period shaped the American dream, owning a single-family home with a yard and a safe neighborhood. However, this dream was largely accessible only to white middle and upper-class families due to discriminatory policies like redlining, which denied mortgages and investments to black neighborhoods. Government policies at this time viewed homeownership as a way to build wealth and stabilize families. Housing was more than shelter, it was a financial asset, a means to accumulate wealth over generations. This perspective set the foundation for housing to be intertwined with economic status, influencing policies and development for decades. By the 1980s, housing's role shifted further towards financialization. Changes in tax policy, deregulation of financial markets, and rising interest from Wall Street transformed housing into a major investment vehicle. Real estate was no longer just a place to live. It became a commodity for speculation and profit. Developers, investors, and even financial institutions began to view real estate primarily through the lens of a return on investment. This created strong incentives to build units that could command the highest prices or rents, often luxury or market rate housing, rather than affordable units that meet the needs of low and middle income families. To better understand, zoning laws determine the types of buildings allowed in specific areas, which shape the character and density of neighborhoods. In many American cities, these laws have long favored single-family homes while restricting multifamily units and affordable housing, a practice often referred to as exclusionary zoning. By limiting the construction of denser housing options, these policies reduce the overall supply of homes, contributing to higher land and housing prices. As land becomes more valuable, developers are incentivized to pursue high-end projects that promise greater returns rather than affordable developments that may or may not cover the rising costs. For instance, a developer restricted to building on single-family zoned land might opt to construct a few luxury townhomes rather than push for more affordable apartment complex that's not exactly permitted under the current zoning. This dynamic reinforces inequality and limits access to affordable housing for many residents. In many urban areas, even where zoning permits multifamily housing, strict height and density restrictions significantly limit the number of units that can be built on a given parcel of land, which creates a financial dilemma for the developers. With fewer units allowed, the cost of land, construction, and compliance must be recouped through higher rents or sale prices, which, as a result, developers often target the luxury market in order to maintain their profitability. In the aftermath of the 2008 financial crisis, institutional investors such as private equity firms, hedge funds, and real estate investment trusts began purchasing large volumes of residential real estate. With property values depressed and interest rates low, housing became a very attractive investment vehicle. These firms acquired single-family homes, luxury condominiums, and entire apartment complexes, treating them not as shelter, but as financial assets expected to generate returns in the future. This shift transformed the housing market, particularly in high-demand urban areas, by injecting significant capital into real estate and driving up the prices. The focus on profit often prioritized luxury developments, contributing to the production of high-end units. In some cases, luxury properties were even held vacant, not intended for occupancy, but for appreciation and the eventual resale value. This behavior reduced the affordable housing supply and fueled affordability issues, as more homes were simply just priced out of reach for the typical buyer and renter. Now, have you ever wondered why some luxury homes or apartments ended up being priced way higher than they probably should be? Here's a little behind-the-scenes trick. Developers and investors sometimes use things like rent discounts, free months, or flashy move-in deals called concessions to make properties look like a great deal to renters and a strong investment on paper. Let's say a luxury apartment is technically renting for $3,000 a month, but the developer offers 2 months free if you sign a 12-month lease. Well, that's a big discount, but when they report the rent to investors or lenders, they still often list it as $3,000. Why? Because it makes the property look more profitable than it really is. It's a bit like inflating a balloon. Looks impressive at first, but there's always a risk it might pop. This tactic can make the whole market seem hotter than it actually is, which attracts even more investment into the luxury space. But here's the kicker. It has absolutely nothing to help regular people trying to find affordable housing. In fact, it often pulls more money and attention away from where it's truly needed for the middle and lower income homes. So while investors get hyped up over inflated numbers, the affordability crisis quietly worsens. It's a clever trick for the books, but not really a solution for the millions of people just looking for a reasonably priced place to live. Cities with strong tourism, such as Miami, Los Angeles, and New York, have experienced a surge in the conversion of luxury housing units into short-term rentals through platforms like Airbnb and Vrbo. Property owners and investors often find short-term rentals far more profitable than traditional leases, especially in desirable neighborhoods near tourist attractions. As a result, a growing number of condos and apartments are being used primarily for travelers rather than local residents. While this can generate significant income and boost local tourism, it also reduces the availability of housing for long-term tenants. When enough units are removed from the permanent rental market, the overall housing supply tightens, placing upward pressure on rents and home prices, simply due to the needs of supply and demand. This particularly affects working and middle-class residents who face increasing competition for the fewer units that actually are available. Here's another hidden nugget. Many luxury developments get financed through short-term loans, which push developers to build quickly, sell fast, and deliver high profits right now, leaving little time or resources for creating affordable housing that lasts. This rush often leads builders to skip opportunities for middle or low-income units. As a result, the market becomes flooded with expensive units that do little to address the real, long-term challenge of making housing accessible for everyone. Simply put, most Americans just can't afford these luxury homes, especially families simply needing more space, good school districts, and safe neighborhoods. Truth is, many of these upscale developments sit empty because they're priced far out of the reach for the average person. Meanwhile, everyday people face bidding wars, wait lists, and soaring rents for the few affordable options. On the surface, the housing market seems busy and booming, but beneath the facade, it's disconnected from the real needs of the actual people. America's flood for luxury homes is by no accident. It's the result of decades of policies and market initiatives that simply prioritized wealth over shelter. Combining with zoning laws, economic pressures, and investor behavior that has shaped the overall housing landscape, many of these luxury homes are simply oversized McMansions or bougie apartments that use a lot of land and resources, which drive up construction and maintenance costs. While shiny new buildings may signal growth and prosperity for some, most Americans, they highlight the persistent failure to build housing that is truly affordable and greatly needed. So instead of us building these massive luxury units, imagine if developers focused on mid-sized, efficient homes that actually meet real needs. Smaller homes cost less to build and maintain and can help address the housing shortage by providing more affordable options. Changing this dynamic won't be easy. Sure, it requires a bold, systemic rethinking of housing policy, financing, and development, but by understanding how we got here, we can work toward a future where housing serves everyone, not just those who pay the highest prices. It's a smarter, more sustainable approach, rather than the current luxury trend we're on. In short, the luxury towers rising above our cities may look like progress, but they actually cast very long shadows. Beneath them, millions of people still search for a stable, affordable place to call home. This isn't just a housing issue, it's a reflection of our values and the systems we've built over time. If we want cities that are livable and inclusive, we need policy shifts, public investment, and overall a new vision, where housing is a right, not a luxury. If you learned something today, do me a favor and smash that like button and subscribe for more interesting stories. As always, thanks for watching, and I'll see you in the next one.